All right, so we came into the day with this sell-off from the overnight hours. Basically, around 4 o'clock in the morning, one of the backers for Credit Suisse said that they wouldn't re-up and increase their backing, and down went the market. But it stabilized long before we actually got into the open, and it kind of primes us for some trading opportunities. So one of them that I was really focused on as we came into the open was this area here. It really comes back to this area here, right? So if we think about this as an area of resistance, then it actually has to prove that it's resistance, and we can always look back later and see if it did reduce or resist the market. But if we look at it instead as an area of liquidity, then we can ask the question, have we absorbed all of it? Have we actually made it through that zone? And until we do, we have to assume or believe that there is liquidity there. And those wicks kind of show us that, right? When we look at that, we can see that the price came in and found a lot of orders in that area, and it just wasn't able to make it through there. And on the dome, that would be orders on the sell side, right? So sellers just sitting up there, price couldn't make it through, and down we went. So as we got near the open, I was watching that level, that 3,900 round number gamma level. If you look up spot gamma, it has 3,900 listed out as a significant level of resistance. And then we had the Globex low with a really nice tweezer bottom. We were just ready at this point. One of the best trades today came from 39.05 and the rejection of it. It was yesterday's regular trading hours low. I have to make that distinction because it wasn't the low of yesterday. The low of yesterday was actually a lot lower. It was the RTH low of yesterday. That rejection off of 39.05 was the best trade of the day. So we were already bearish, but by the time we got near the open, we kind of had thrown that bearishness off, and we were looking for some upside movement. We just needed a good play. Now, this run here, when we got to 39.05, it was so early in the morning, 9:34. I really didn't want it. Plus, it was the first test of that. So, we just came into the open. We made it through VWAP. We made it through this level of liquidity, and I wasn't interested in taking that. But then we had another shot at it at 9:42, and we overran it, just completely ran right through it. Still pretty early in the morning, hadn't yet even made it to 10 o'clock, and nice rejection level right there. This one was the one. So at this point in the day, we're past that 10 o'clock time frame. We're out of the that first 30-minute window. We had a decent collection of price down here, clear breakover, run back up, and I gave the shout out that this is setting up for one of the best trades of the day. And it was easy to see it coming, right? We made it up to VWAP, kind of struggled against it, pulled back just a little bit. It's this same move right here, right? Made it up there, pulled back, made it through. So we made it up, pulled back, punched through, and there was the rejection. So best trade of the day. Now these earlier ones, they were tradable. This one kind of missed. It just didn't quite get there. It would have left you hanging. And these overshot it really hard, but also it's just the wrong time frame. 9:40 in the morning, we're still dealing with a lot of what they call price discovery when the market opens up, and it has to absorb all of that news from the overnight hours. If I had to make a complaint about this trade, it really was that explosive breakover on the VWAP. But really, when I gave this shout out, we were sitting right about there, right underneath 3,900. And I gave the call out, look for yesterday's low to be retested and that this might be the trade of the day. So when it got up there and it took that rejection and we kind of struggled a little bit right there, that was the one spot where I heard from a number of people that they had already brought their stop down and they got taken out right there. Now, it's always difficult when we talk about moving the stop, right? Because we want to get risk out. We want to make sure that at the very least we're going to, get commissions covered and we'll worry about profit afterwards, but we just don't want to get a loss. And I get it. You do want to move that stop, but a lot of times when we get a rejection, price comes back up and then tries it again. Same thing happened back here. We broke through, failed, came back up again, and then ran, right? So a lot of those times we call it like stop hunting and just retests of the levels. They're going to take you out and then leave without you, right? So one of the things that you can focus on doing is trailing your stop behind the last closed candle, right? And the other one is when you do bring your stop down, just bring it down to the next candle after your entry and let your stop stay above that candle. Now, there is another one that I've talked about where you would use 50% of your entry candle. So your stop would be, if you focus on this red candle right there, your stop would be somewhere in that area and you wouldn't have gotten tagged there either. And in fact, 50% of that level is just about where the top of this candle is anyways. So they kind of are the same things. Either way, if you didn't rush bringing your stop down, then this jerk to the upside before it dropped down wouldn't have taken you out, right? And that's kind of the focus. So this yellow line down here where we got hung up, that was the RTH open. And I think this is one of the most overlooked pivot points out of all of the four. The RTH open is really one of the best pivot points for intraday trading. Sure, yesterday's high and low is great. Don't get me wrong. I mean, I really like those. But the close, it's got four different values because you got the 4 o'clock, the 4:15, the 5 o'clock. So that's not the best one. But the open, yeah, the RTH open. Not only do I like that one and it's really overlooked by a lot of people, it's subtle, right? A lot of brokers don't offer you a tool to market. You have to make your own or just use your drawing tool, which is the best way to do it. Just reach in there as soon as that candle opens, snap a line there on the day, and then watch how price reacts to it again and again when we come back to that level. So high conviction setup, low risk entry. I think I had a 5-point stop on this, which sounds pretty rough, right? When you think about it, but really it wasn't that bad. 39.11 is really what I was focused on. And, that was kind of the key in my mind. If we got above 39.11, then we were able to make it through this liquidity. And I was obviously going to be on the wrong side of the trade, right? So if this had shot to the upside and took out 39.11, the cog line, then that means it made it through all of this. I'm wrong and I need to get out. I started the trade with that wide stop, but it didn't take very long at all before I moved it down, right? That's kind of the whole idea, getting risk out as soon as possible. So not too bad. The trading day is still junk. It's still trash. It's still a range bound market. And we're just doing the best that we can, right? There's really not a lot of wow setups. They're just okay, right? And that's what this one was. It's okay. Later in the day, I wasn't around to take that one, but it's the same trade all over again, coming up against yesterday's low and taking a solid rejection again. This one was really nice because it had this rising wedge, and we didn't get a big explosive push into it the way we had done earlier on the one that I took. This one actually was grinding its way up, right? It was just this grind higher and higher and higher and higher until it got there and then immediately rejected. You know, for anybody that caught this one, you were in the money on that 10 points in the blink of an eye. I mean, that thing just, what a beautiful drop. I missed that one, but it was just as good. And the target on that is back to VWAP, which you would have made in a minute and a half. All right. You went from 39.05 to 39.85, 20 points in a minute and a half. Beautiful play. Then the double top here for the longer term trade. Nice double top, nice wick rejection, clear follow through, and just a little bit of hesitation down there, making us think that maybe it was going to do this one more time, but it didn't. And away we went. So it wasn't too bad. Either one of those would have been fine. This trading day, though, you know, it's just it's still a lot more of that trash. There is a phrase called well, it's a phrase that says persistence beats resistance. And we kind of see that here. So we had test and fail, and then again and again. Then we missed, and then we broke through it with conviction. So you got to kind of assume that sooner or later, if it keeps kicking on the door, it's going to get the door open, right? And that's exactly what we had right here. But I want to present it to you a little bit differently than that. I want you to think of liquidity. If there was a big seller sitting up there, and every time we came up into that big seller, he unloaded. And then we came up into him again and he unloaded, and again and he unloaded. Then maybe he got a little anxious and he unloaded it early here. But he was also done, right? He didn't have anything left to unload. And he said, okay, well, I mean, that's it. I'm done. Maybe that's why he even took a front run, right? Just to get it over with. And then next time we come up into that level, there was no big seller there. And we just shot right through it because price was seeking sellers. And there was no more sellers there. They were up here. So just a little different presentation, right? It's the same idea, but it gets you thinking about it in a different way. When you're looking at the trade dome on your broker, and you're using the dome to trade, hopefully you're trading futures with the dome, you can see those orders. They present as icebergs and ceilings, and they're over your head or they're underneath the market. And sure, they'll spoof you, right? They'll pull orders off and put it back on and make you think there's a big size when there isn't. But if they get caught doing that, it's against the law. And most of the time, they're obvious when they're running that spoofing game. You can see it pretty easy. So to me, that was the best trade of the day, especially since I was able to call it in advance and we seen it coming. But you know, this one was just as good and we seen it coming. If you were watching for it, you had plenty of time to react to this one, to wait for it to run up to that level. And the rejection was so immediate and fast on both of those that you monetized really, really quick. All right, so that's it. If you had a better one than that, throw it in the comments. Let me know what you got. Otherwise, I'll see you guys tomorrow.